We'll just wait for maybe half a minute more and then start off this special panel discussion, GST at 5. There we go. 5 years back, when GST was unveiled on the stroke of midnight of June 30th, 2017, at least there's so many conferences, so many events, a lot of hullabaloo, and almost a celebration, so to speak, to transition from a multi indirect tax regime to a one nation, one tax, good and simple tax that it was being called. And I jokingly kept referring to GST as, it's like a Abbas Mastan movie, the race series, that just when you think that the surprises are over, the twists are over, there are more twists. 5 years hence, it would be probably more appropriate to compare GST to the Harry Potter and the Chamber of Secrets, because it keeps unveiling more mysteries, and you learn something new every day as far as GST goes. If anyone thought that GST was going to be a settled regime in the first 2 or 3 years, that's definitely not been the case, albeit we've had several positives. And if you want to give a weather analogy, not cricket this time, though Rohan Bhai is a big cricket fan, weather analogy, in Mumbai it's raining cats and dogs. So someone may say there are a lot of clouds over the GST. Someone who's a little more positive in his approach may say that yes, the clouds are clearing up. To discuss GST at 5, we have a very special panel today. We when it comes to indirect tax, when it comes to GST, it doesn't get bigger than the panel that we have today. Mr. V. Lakshmikumaran, founder, managing partner of Lakshmikumaran Sridharnath Attorneys, advocate Rohan Shah. Between the two of them, possibly they have seen everything on indirect taxes in the last 4 decades. They've contributed to jurisprudence on this subject, original thinking on this subject, GST evangelists here in India, and both of them advise large Indian conglomerates, Fortune 500 companies, global MNC giants. We really cannot get bigger experts in this country than Mr. Lakshmikumaran and advocate Rohan Shah. We had a joke earlier on that this is a free webinar. Trust me, this is the only place where they talk without charging. So we are lucky have them both here over the next 1 hour, contributing their expertise, their reflections on GST at 5. And we said for this special panel, a special guest to moderate, the discussion, Govindraj Ethiraj, renowned financial journalist with over 3 decades of experience in print and television, also business magazines, a former corporate editor at CNBC, was responsible for driving its programming expansion growth in the early 2000s, then editor-in-chief at Bloomberg UTV, and now running independent digital media ventures, Boom and India. Spend just a line on Boom, because it's something that Govind is very passionate about. Govind is a media executive and entrepreneur whose public interest journalism ventures use data stories in areas like health, education, and climate, as well as safeguard the transparency, accuracy, and integrity of news. He founded Boom, an independent journalism initiative that fights misinformation and explains issues with the larger objective of making the internet safer. Thanks, Govind, for kindly consenting to moderate this panel, and welcome on behalf of all the Tax Sutra patrons and readers. Trust all of you all have enjoyed our GST coverage. If you feel that you're like inundated with updates and judgments, forgive us. That's not because of our doing. But yes, I think we've all had an exciting time over the last 5 years. Govind, over to you, and handing it over to you now for the next 55 minutes.
Thank you so much.
Thanks, sir.
Yeah, thank you so much, Arun. Pleasure to be here. So the format that we're going to follow is as follows. I'm going to request both of our speakers to speak for about 5 minutes each on the outside, so maybe 4 minutes, after which we'll have a conversation, post which we'd really like to have a expanded conversation wherein we use your comments as well as your questions to trigger off thoughts and future perspectives. Now, as Arun has defined it, July 17, 2017 is the start point. My own little anecdote, as you drive into Mumbai city, there used to be an octroi post. And I remember it was at one time, the fear was so much that even if you were coming by private car, you would always wonder, what am I carrying in the boot that may cause them to stop us and then check it, and will I have to pay octroi on that? Even if you're traveling on a private trip. And of course, it got worse as maybe you were carrying more things and so on. And we all know the distortions that created. So even as we talk about the last 5 years very quickly, the objective of this discussion today is to also try and focus on the next 5 and try and understand in terms of the key objectives that GST set out to achieve. One is at a macro level in terms of the revenue raised, giving the government comfort in terms of indirect taxes, which, as we know, in India is much higher proportionately to most other countries. The second is, what does it mean for me as the taxpayer, whether I'm an individual or an institution? Has life become simpler for me? Can it become simpler? How can both of us work in greater consonance if we can? That is me, the individual, and the government, to achieve the twin objectives or the combined objective of a higher and better geared tax-paying society. On that note, let me hand over now to our speakers, and it's over to you, Mr. Lakshmikumaran, if you can go first, and after which Advocate Rohan Shah.
Thank you, Govind. I would say the last 5 years of the GST has got what is called hits and misses. On the positive side, I would say that my dream that one day all these indirect tax will be subsumed into one tax ultimately came true on 1st of July 2017. The concept of one nation, one tax on the indirect taxes is a major tax reform. What exactly has happened during this time? Initial times, the industry was not prepared, but the tax regime was introduced. Somehow or other we managed. As Rohan used to say that we were changing the wheel when the car was running. That is exactly what was happening in the last 5 years. But with all those things, we saw the buoyancy in the tax collections. The tax base has gone up, and the credit flow from center to state and state to state also is now at the back end is going on fairly smoothly. The compensation cess has been extended for some more time. That's fine. We expected that. According to me, certain element of gray market has slowly is, I won't say vanishing, but it is definitely getting lesser and lesser. On the question of negatives, I could say that the multiple rates continue. We were thinking that the rates of 12 and 18 will be merged into one, which did not happen. The auto-population of returns, which never happened, which was originally thought. And in fact, invoice matching was a concept originally thought, ultimately it was abandoned. Frequent changes. And of late, what I am seeing is the so-called investigations being started by the investigating agencies, by the center and the state, creating a sense of terror in the minds of the assessees. There are assessees who are having fake invoices, etc. You have to deal with them differently. But there are assessees who are paying bona fidely the correct amount of tax. The department may have a different view, but then they try to treat them at par with those tax evaders. And that is actually causing a lot of concern. Advanced ruling authority is again a major problem because we found that quite a few contradictory rulings are being given and defeating the very purpose of one nation, one tax, because different states will start different taxes. And we also see in many cases where the trade chain is broken by giving exemption on the finite goods with the condition you should not take credit. That's not the spirit of the GST, because you will have hidden taxes when you are exporting the goods. So that is one of the concern which I have. As far as the future is concerned, next 5 years, Govind, what I could say is, if the revenue can bring certain amount of sanity with regard to dealing with the assessees on bona fide mistakes or bona fide impressions, that will be better. And while the GST is stabilizing, the positive effects of the GST with regard to reduction in costs and then transparency taxation and exporting the goods and not exporting the indirect taxes will become a big economic growth as per the GST, coupled with India is now going in for a large number of free trade agreements with developed countries. That will also open up a whole lot of markets for Indian exporters, both goods and services. And these agreements are not merely agreements on goods alone, it is a comprehensive agreements on several subjects. So I would say that both GST and the free trade agreement put together should open up the Indian economy and must grow at higher digits. I would say at this point of time, I don't know that I'm kept of 5 minutes time with yours. Thank you.
Yes, you have. Just a quick question again from a slightly more macro. So, we keep reading about these numbers, 140,000 crores, 150,000 crore GST collections. What does that mean? I mean, is it saying that the economy is growing? Is it triggered or driven by pure economic activity, price rises, something else? And the reason I'm asking this is, isn't this good news too?
It is definitely a good news. See, there are 3-4 things happening, Govind. One is the economy is picking up post-COVID. That is one. And secondly, as I was mentioning, that the gray market is getting reduced. More number of people are coming into this. That itself is a positive thing. And these two put together, you are able to see the higher growth in the tax collections. I would say this could become ultimately the benchmark for how the economy behaves, because the GST covers more than 80-85% of the activities, both goods and services, excepting some exempted services and goods, etc. So that, I think, even agriculture, if you take away, and the manufactured goods and services, I think it covers this. Therefore, it's a good indicator of this, I would say that.
Okay, thank you. Rohan Shah, it's over to you.
Thanks, Govind. So, Govind, I think the biggest gain that we've had in the context of the GST is that we have the GST itself. Today, as we have the GST, and we think back to the pre-GST period where you had multiple taxes, you had multifarious legislations, you had different administrators, your credit chains were blocked. So I think the biggest boon is the fact that we have the GST itself. And, many of the signature lines which emerged to sort of exemplify what we wanted to achieve from our GST, which was one nation, one tax, no cascading impact of tax, all tax paid will sort of result in credit. Now, when we sort of start getting into the minutiae of those issues, that is really where, we find that sometimes while we have the GST, we obviously have not got to a utopian situation. We still have a lot of open issues, right? But if I sort of continue to focus on the positives, besides the fact that we have the GST, which was itself a difficult bargain, and I think great credit to Mr. Jaitley in terms of just his dexterity in terms of bringing people to a common point of view, and some compromises were made in terms of compensation, etc., which still sort of continue to linger. But the fact that we have it, the fact that you have the GST Council, which is a great reflection of an institution premised on cooperative federalism. And for a large part, and I would think for 4.5 years or so, I would believe that it worked in the best consensual spirit. It is really only over the last maybe 9 months or so that you have begun to see the first signs of differing voices. And maybe those have got sharper in the last 6 months. But the fact that you have the GST Council, again, is, I think, in our form of structure, quite a unique achievement, right? And the third thing, which was almost thought to be impossible, which is to enlarge the footprint of the tax engagement between the tax department and citizens. The fact that so many more businesses have come into the tax net. Now, the significance to me is not that they are in the tax net. The significance is that if you are paying GST, you also exist for income tax. You also exist for labor legislation. You also exist in terms of standards of the products and services. So from that perspective, I think 3 very big gains, right? Structurally, there could be some criticism in terms of the IT system that sort of came up, and in terms of the factor that the infrastructure was not completely efficient. And as a result, I think for 5 years, we've seen different types of litigation continue just because there were quite significant gaps in the infrastructure which was provided. The other sort of issue, I think, which is much more a issue in terms of both how the law is written and how the law is interpreted. I think there was a very fond hope with everyone other than the community of lawyers, I would think, that we will have a far less litigious regime, that there will be far greater certainty, there will be far lesser litigation. Sadly, that has been belied because GST has become an extremely litigious tax. And I think we have only seen the first generation of litigation, which is assessee with tax administrator. But I fear that we will also see tax litigation between states when they dispute issues of place of supply and therefore taxing jurisdiction. So I think, those were some of the situations which were not so happy. Structurally, I think 2 things were completely wrong, and I hope they will be righted. To my mind, you had to have a completely robust credit system. Any 1 rupee of tax paid should automatically have become 1 rupee of credit, because that's the only way you're going to get rid of the cascading tax impact. What we got instead is a credit mechanism with several burnouts, with several limitations, with several conditionalities. And to my mind, that is just exactly opposite to what the fundamental structure of a GST system should be. So I think that sort of situation on the credit side was, definitely a miss. What I think is the good, happy news going forwards is the number of 1.45 lakh crores, etc., that we mentioned. Obviously, the system is settled. Obviously, the system is now, in a way, generating the sort of taxation which is relevant to the programs of the center and the state, and to support those. Now, within this, of course, there is one message which shouldn't be lost on anyone. If you are generating more tax and more certain tax, then the only truth is that you are having more commerce. Because ultimately, this is a tax on a supply of either goods or services. So the greater the events of supply, the greater the collection of tax. Now, if therefore we recognize that facilitating greater commerce and easier commerce in any case gives us more tax, then these other side debates that we permanently get into, evasion, credit frauds, these are, to my mind, issues to be looked at separately. When we talk as a nation of facilitating business, ease of doing business, primarily that should be for our own entrepreneurs. And in that, obviously, one of the key issues is an easier GST regime to deal with. easier to deal with GST regime, which focuses on promoting business, also allows us to harvest the benefit of the more open global markets, the China plus one, the aspect of export opportunities that we will now have all over the world. So I think, a mixed bag, but for me, still the overarching achievement is that we have a GST, and therefore we have the ability to discuss this. Many nations of lesser complexity than us brought a GST and failed with the GST. I think we must give credit to everyone involved, legislators, regulators, government, assessees, that we have a GST and now it's on even keel. So I think now it's really time to look forwards.
Okay, let me pick up on a couple of points. First, at the macro level, and let me come back to you, Mr. Kumaran. So, if we are hitting targets of, let's say, 140, 150,000 crores, and as Rohan also says, that means the economy is contributing directly to indirect tax collections, the higher indirect tax collections, and exactly what you've been saying. So why is there continued apprehension that there is so much leakage, which in turn drives tax policy in the GST space?
See, Govind, while we are talking about the higher collections here, that is because of the buoyancy, the inflation, the dollar rate depreciating, etc., all those things, etc., also contributed to this. While about this, see, unfortunately, there are black sheep in the economy, and they create distortions, and we are not able to eliminate them completely. If I can supply invoices, not the goods or services, and I can make money out of that, if that is the that is the mindset of certain people, that is like a termite which eats into the entire system. So therefore, the government has to necessarily deal with them. A tax collector without teeth is like a tiger without teeth. So you need to have that. That's definitely. But what important is regarding the other side, those who are paying the taxes properly, that the treatment there is not that honorable. That is where I think the problem comes in. So therefore, what I was saying is that the government has to distinguish between the two categories of people and then deal with them in a very different manner. One is gentle, another one is hard. That's what I was trying to say.
Right. And Rohan, how do you build on that further? I just want to address this a little more, because I mean, this is clearly in all my conversations, including with everyone here, this is a concern that rises up immediately, that there is a certain degree of high-handedness, there is maybe arbitrariness, despite the fact that we've achieved so much, people feel, particularly small and medium enterprises, feel particularly victimized. So how do you create a constructive environment where, let's say, the exchequer feels that it's getting its due, and that those who are playing fast and loose with the system are minorities and not so relevant in the larger scheme of things?
Govind, I mean, key issue that you address when you raise this is, how do we really get to a situation where there is actually ease of doing business? And I am not obsessed with the fact that I will get raided, surveyed, and go through everything else that comes with it. And I think structurally, two issues, right? One, for a long time, and I suspect even today, we have tax administration by target. So depending upon the national need, no matter what the budgeted numbers, if more resources needed, then it has to come from tax, and then we divide targets across the country. Now, if tax administration is by target and not on the basis of what is the actual level of economic activity, then the gap has to be filled through some process of recovery over and above what is the known level of commercial activity. And that takes us sort of into the space where we become far more confrontational, where this becomes adversarial. So that takes me to the second issue, that what is today the characteristic of the relationship between the assessee and the taxpayer? Most people would say that it is bordering on distrust, that both have an inherent distrust of each other. And in times of greater pressure, this distrust turns into an adversarial issue. So you will have raids, you will have investigations, you will have arrests, you will have demands, etc. Now, one thing we have to understand, and let's look at what all the world sort of tells us is probably one of the easiest jurisdictions in the world to deal with on tax. And let's say that's Singapore, right? What is it that you hear? Firstly, there is no inherent distrust that the assessee is trying to pay lesser tax. The belief is you're paying your tax. Now, there can be two sets of issues which emerge. First are interpretational issues. You have a new law. Not everybody understands it perfectly. And honestly, even what High Court may say is correct, Supreme Court may overturn. So nobody really knows exactly everything perfectly. Therefore, you will have scope for interpretational issues. We have to treat interpretational issues separately. And we have to treat evasion separately. I think a clear demarcation, even if it has to be legislative, needs to come in to say that issues of interpretation will be dealt with, let us say, by an appointed panel, ex-judges of Supreme Court, ex-bureaucrats, some sort of well-known lawyers. You take your issues to them. It's interpretational. They offer you a view. Both sides agree to the view. You effectively come to a tax consequence. And then the tax consequence you address by paying tax. None of this penalty and enhanced interest, etc. You recognize it as interpretational, you address it. Separately, there is evasion. And I think in no evolved society is there place for evasion. And I think you then have to demarcate evasion and deal with it very, very strictly so that ultimately you are sending out a message that in this system, your problems can be resolved easily. There is no reason to resort to evasion. And if you resort to evasion, then you must take all the consequences. And those consequences are penal, criminal prosecution, blacklisting, whatever it is that happens. So I think fundamentally, if our approach is not of trust, if we collect taxes by target, but not based on real economic activity, and if we treat every rupee paid as every rupee short paid, as evasion, then we have the recipe for disaster that we have today. But if we can shift this to clearly demarcate between interpretational issues and evasion issues, treat both differently through a system, I think in 3, 4, 5 years, we will have trust in the system. And, hopefully people will speak of us as a very easy place to do business, even from the tax front. And I think this is an urgent need. It probably has been an urgent need for 20 years, but now more than ever, because if you are getting to be the world's 5th largest economy, and you want to be the world's preferred investment destination, then surely we have to create this environment.
Right.
Govind.
Go ahead.
Before I think you interject, I wanted to build on what Rohan has said. And he brought a beautiful concept, which I was always thinking and then advocating, of getting independent retired judges of the Supreme Court, High Court, or eminent bureaucrats, or sometimes lawyers, not like me, to resolve the dispute. Basically, what he's talking about is getting arbitration into the disputes between the department and the taxpayer. It's a wonderful concept, and the concept must necessarily be promoted. If civil dispute running into thousands of crores could be conducted by arbitration, an arbitration act empowers them, and the court do not normally interfere with the arbitration awards, and it is taken as more or less thing unless there is some very serious wrong, something committed, etc. Why can't we do the same thing with regard to tax disputes? We are now talking about that tribunal member is not appointed, then there is always delay in this, etc. If we can have that a panel of lawyers, a panel of judges, etc., and then bring in the tax dispute to arbitration, especially those interpretation issues. So let us start with that. If that can be done, I'm not talking about the settlement. The settlement commission is a different concept. This is a case where the disputes are settled or resolved. I won't say settled, resolved by the independent arbitrators. And then you don't have to go in for the appointment of the members, the interview process, etc., etc. You select the panel and then trust them. Ultimately, you bring the trust into the entire system. If that happens, then the disputes are getting resolved, and then the tax collections go up, and this becomes a ruling. And as far as the courts are concerned, if there is a recognition of these awards also as a final resolution of the thing, I think we can move forward very fast and deal with the tax evaders separately with the stick. That's no problem.
Okay, Rohan, any response on that? Interpretational issues, arbitration.
I think as with so many things, we are fiercely in agreement. My only thing is I would really see it as a tax mediation, not even an arbitration. See, that whole process in any case is adversarial. All of us who deal in commercial arbitration know that it takes years. But a trustworthy tax mediation, where a ruling is given and gracefully accepted by assessee or department, there is no rancor. And if department, you have lost tax, you recover the tax, no penalty, no nothing. If as an assessee, you're right, you walk home without paying anything. And in a time-bound manner with high quality mediators, I certainly would believe Lakshmi needs to be very much part of that. But I think that's the way forward, and couldn't agree more, that this is the need of the hour.
Right. So let me get a few thoughts from both of you on the other side. I mean, we've looked at it from the department, from the government or the exchequer's point of view. From your point, respective vantage points, where do you see the big challenges and perhaps the opportunities to make life simpler for assessees? Again, this is a more operational question, and I urge you to look at two kinds of sets of people. One is traditional, maybe large enterprises, but also equally small enterprises. What are the big pain points that we can address as we look at the next few years? Mr. Nayan, could you go first?
Yeah. Talk about the pain points. The pain points are common to big assessees, small, medium, tiny, everybody. The law is complicated. Let us accept it. 28 states when they came, and then they started legislation, everybody contributed. Therefore, we missed a big opportunity of making the law simple. So therefore, the law is complicated. It is not properly understood by many people. So therefore, we have interpretational issues. But I think to solve the problem is to reduce the number of rates and reduce the number of exemptions. I think that is the first thing I think we should do. As far as the valuation is concerned, somehow or other, the GST has somehow overcome the valuation dispute which used to have in excise and also in VAT. But somehow or other, I think the disputes on valuation, to my mind, will be much less than what it was in excise. So now the rate disputes and the exemption disputes are going to be a big thing. Therefore, if we can reduce the number of rates and reduce the number of exemptions, that itself will result in a lot of clarity, and also simplify the credit mechanism, the method by which the credit being granted. There again, there are a lot of scope for removing those bottlenecks, and then we can make life definitely simple. I think these are the two things immediately we can attend to.
Rohan?
Yeah, to me, one of my abiding themes which recurrently comes up is the credit mechanism, right? If you look at the post-GST litigation, I would think, close to 30-35% of it is about credit issues and related procedural issues. Now, in any system where you say that you want to avoid cascading impact, the very simple expedient is if a rupee of tax is paid earlier in a transaction, then later in the value chain, it should become credit, right? Now, we have all sorts of different combinations of issues where either your credit is completely denied, or you have a situation where your credit is restricted or it's conditional. For example, there's no rationale today. You are a nation who wants to build the world's finest logistic infrastructure. Ultimately, you will have to build warehouses. Today's situation is you build a warehouse, all the input credits, goods or services in relation to that warehouse will not be available to you. Because why? Because what you've created as an asset is an immovable property. Now, from this property, when you let the warehouse out, you will earn incomes which will be taxed. Now, there's no rationale why you would not allow this. And you are, in a way, bringing a greater cost to building national infrastructure. Doesn't just make any sense. So to me, the one situation is you need to completely liberate the credit regime. Yes, there will be some who might misuse it, but you cannot allow the fact that there are some people who are not well-minded to really stop something which could be of such great benefit to our entire industry. So to me, the credit is one of the key themes. The other issue really, in terms of where are the disputes that people are facing. Yes, there could be classification disputes on rate. And, typically many of those are overcome in many countries, by having just 2 rates, and which is, I guess, our ultimate ambition. And definitely in the context of one chapter of classification to have only 1 rate. So in terms of products and nuancing of products and distinction of products, you take away all of that. In valuation, again, somebody who's in the legitimate chain and is making an industrial output or a raw material, honestly, what value he pays is irrelevant, because if he pays that value, he pays a tax, there will be credit available. Whether that value is 10 rupees or 12 rupees, ultimately it will be credit. And somewhere in the value chain, you are going to catch that. So quite honestly, I think a step back to look at these not as problems, but really as issues where we can create facilitation. And I think where the situation is troublesome for the smaller assessee, or even sometimes the mid-size industry, is that it's a complex procedural law, and you need a consultant, and every once in a way you need a lawyer. The issue really should be that you need to take an impact analysis of all your procedure. I think if you took all your procedures and benchmark them against an impact analysis, probably 40% of the procedure is surplus and unnecessary. A lot of assessees can give you far greater and better output and insight on this than some of the best professionals. I think that dialogue must be had. All procedure which at this point in time is duplicative, replicative, unnecessary, really just should go. And it's not that some of it hasn't gone, but the point is it is happening so slowly that new procedures come in, new circulars come in. So I think you create a law which is easier to live with. You are going to see far greater compliance, far greater collection. Everybody goes home happier.
Okay. There are a lot of questions coming in as well. There is a question from Akshay Havaldar who asked about the tribunal formation, and also, of course, the parallel question is the appellate tribunal, and when is it going to come? Because high courts are flooded with cases. Is there a path forward, Mr. Kumaran?
I mean, this is the sad story of GST. 5 years down the line, still we don't have the sight of a tribunal. And when the disputes are mounting and there is no clarity, authoritative ruling from a tribunal is very, very necessary for this assessors to move forward. And there is some, I would say, a silent protest or discontent between the bureaucracy and the judiciary. I think that's probably delaying it. What I saw this time, the GST Council, they said that they formed a committee of ministers now, to a group of ministers to work into this and then prepare. I hope something can happen. Otherwise, the judiciary has necessarily pushed the government to do something as far as this is concerned. They're very, very necessary. 5 years law without a tribunal is obnoxious. I mean, it is absolutely not acceptable.
Right. Gargi Padi asked, I think this is to you because you mentioned it. How does FTA, free trade agreements, and GST, how will they open up the Indian economy? I think he's asked more like an explanation.
Oh, yes. See, when I'm talking about the GST, once you have the credit mechanism completely, and therefore the tax paid at the early stage no longer becomes a cost to you. And when you're going to export, whatever ultimate taxes payable by you is available to you as a credit or as a refund or as not payable. Therefore, effectively, you are exporting the goods alone, not the hidden taxes. Therefore, it becomes, you are able to compete in the international market. Added to that, if we are talking about the free trade agreements, then whole lot of custom duties, other countries for these products are also being reduced, either to zero or much lower. So therefore, you have an advantage over other countries as far as India is concerned when you export the goods. When you're going to become the world export hub, I hopefully it happens in the near future. Then what happens is these free trade agreements with the developed countries, because they have a lot of appetite for these particular goods and services. And when they reduce the taxes on the goods, custom duties on the goods as also on services, then what really happens is you are able to export and you also better advantage over other exporters. And therefore the economy will definitely will boom. That's what I was saying. Therefore, the two things are happening simultaneously.
Yeah. Govind, if I might also just come in on the
Go ahead.
The FTAs. Yeah, the situation that an FTA achieves is that it gives you access to counterparty country and their markets at lower rates of customs duty, right? And therefore, there is for the buyer in the local market an inherent advantage to source from India. Now, the three aspects which still will come into consideration. Firstly, what are the economics of your production? And in the economics of your production, which will therefore determine your export price, if there are embedded taxes which are non-virtuous because they are neither refunded nor credited, then inherently your cost is going to go up. And if your cost goes up, even in an open market, you're not easily going to find customers, right? The other aspect, of course, which is not about talking on this show, is really the issue of the quality of what you offer, right? Now, the third, which is a huge advantage for India, is that, when you look at the old BRICS acronym, it's amazing that Brazil is teetering as an economy. China is persona non grata because of certain credibility issues. Russia is persona non grata because of its recent aggressions. That leaves India. There has never been a sweeter spot for India. The question now is, how do we get our tax systems in place? And more importantly, how do we get the best quality product which a global market needs at the best price point across to that country? So these are intertwined. And I think as Commerce Minister sort of is on this fantastic trailblazing, success story in terms of his international FTAs, WTO, etc., I think correspondingly, MOF needs to step up if we have to fully harvest, all the early harvests that we have now negotiated with all.
Okay, great. I think that's very well stitched, Rohan. So, there are a lot of questions which I'll urge you to go faster because we've only got 15 minutes and these are very specific, but since people are asking, I think it'll be good to pick them up. So first, the broader one, R. Gupta says cost of GST compliance is increasing multifold and still department starts GST audit with a preset mind that all SECs are tax evaders. Department wants to verify all transactions instead of sample checks. Their checklist is huge, including items already available at their end. What should be done to change this? So rather than that, I'm assuming the plea is that something should be done to change this. Okay, let me pick up a question now. Vipul Mittal asks, how should assessees position themselves on the cross-charge litigation matter pending High Court hearing in the Columbia, Asia and draft circular of the government? Different rulings are talking differently on cross-charge versus ISD. Who wants to pick up?
Rohan.
Yeah, my learned and dear friend will push me forward whenever there is some advice to me. No. Let's deal with this. Look, I think there are two issues involved on cross-charge, right? One is the principle and the second is the evidence, in terms of what system is it you follow and what are your accounting methodologies in terms of how you recognize cost and how you appropriate cost. The situation in terms of sort of cross-charge is in a way slightly complicated by this one concept of distinct persons and the fact that in different states you have establishments, you will take registration and that will be a distinct person. And to that extent, is there some nature and level of supply? Now, there are more recent rulings where the view that is taken is that creating these different distinct persons was really more administrative for the purpose of fixing the place of supply and for the purpose of registration. But just because you have distinct persons, namely a head office and a branch, automatically does not presume the factor that there is a supply transaction between them. And there are BG and a few judgments which have sort of gone on that line. The other thing, of course, which comes up is that if you're related parties or you're distinct persons, then Schedule 1 sort of presumes that even without consideration, there is a service. Now, one situation is between head office and branch. While under GST law, artificially, you do have two distinct persons. In commercial law, this is still one entity. And if it is one entity, then they can't be related persons, because related persons as a concept needs two legal entities. So I think there are a host of nuances, but to my mind, this is the sum total of everything, that will become relevant.
I just wanted to add to what Rohan has said. I can't keep quiet because he has really brought up a new point here. And I am agreeing with him. I'm not disagreeing with him. In fact, most of the time I agree with him. Rohan, we have not argued against each other till now, no?
No.
Oh, that's good.
Maybe we can start today. Yeah.
No, we don't.
Go ahead.
The point here is, while we are talking about the valuation, when the goods or services are being supplied from one industrial entity to another in the value chain, it doesn't really matter whether he sold it at 10 rupees or 12 rupees, etc. Because if they pay it at 10 rupees, then other person will take a credit less. When he paid 12 rupees, he'll take credit more. And somewhere ultimately at the retail level, it will be caught. I am thinking again and again, this creation of these entities as a separate persons under the GST law for the same company, different offices, branches is being treated as distinct persons, is basically to pass on the credit. If they are not distinguished, designated as distinct persons, there will be no necessity to pay the tax because there will be supply. So therefore, artificially they created a system called distinct persons so that you can pay the tax and pass on the credit. Like in the case of valuation, where they say that ultimately if you are going to pay the tax, etc., even if between the two related persons, the value declared in the invoice will be accepted. And the same concept should apply to cross charges also. I mean, why should there be a litigation on this particular thing, this method of calculating this right or wrong, etc., etc.? I think the same principle should apply here.
Right.
Because somewhere it is going to get caught. And therefore, I think it's high time the government comes back and then say, hey, put a nominal cost or no cost. It makes no difference because as far as the supply is concerned, indicate the credit is being carried forward. So therefore, it is high time that no separate levy is charged or charges in the cross charges and tax on it.
Right. Okay. So I'm going to take two more questions, but convert them into comments and then take a question. Neetu Gupta says, if payment of input credit is so important, why can't the government allow industry an option to pay GST on reverse charge basis so that we're not required to pay tax as well as go behind vendors in ensuring compliance? Rahul Renavikar says, how do you see relations between states and the center on GST matters going forward in light of the recent Supreme Court judgment on GST Council's role and the fact that the compensation issue is hanging in limbo? The states, all these 5 years, have agreed to almost everything that the center suggested as there was a compensation safety net. Do you think we will go back to square one, different GST rates in different states? So that's too forward looking. So we may lose a lot of time. So let me pick up another point on another question, which I think is general and is to do with this. In the case, Balakrishna Mayala asks, in the case of section 17 in 5, blocked input tax credit, wherein I am in a staffing company wherein the employee insurance is must to get a business, but unable to understand why input tax credit is denied without any logic or rationale.
I think Govind, we should avoid this type of specific question. But
okay.
I think the theme is very different as far as today is concerned.
Okay.
Because it will take at least more than 5-10 minutes to answer the question. I know more facts before answering this question.
Okay. Here's another. Okay, let me take a broad one then. Rishan Dalmia asks, your views on bringing petroleum products under GST purview, will it be beneficial to end consumers?
Of course, yes. Definitely, yes. And As for only because it is giving high revenue, the state does not want to use as a credit. Otherwise, there is no reason. And as far as the ultimate fuel is concerned, petrol industry, the consumers are going to pay, and therefore there is no question of any adding extra thing. And the only thing the state government do the separate VAT on this particular thing. Otherwise, there is no reason why. And also, it is high time that the commercial properties, at least real estate, will be brought under the GST. Apart from the petroleum product, I mean, we can go gradually. What Rohan was talking about, this warehouses, you build, you incur so much of cost because the immovable property credit is not being given. It is absurd. So therefore, at least as a first step, real estate and commercial properties must be brought under the GST, and so also the petroleum products.
Okay.
There is one comment from a officer, GST officer based in South, and he's posted, I'm just reading out one of the several comments he's posted, lamenting that even after 5 years have gone, still suppliers are transporting without proper invoices, assuming that there will not be any check, and tax evasion is there. So even the law is clear, tax evasion is there. So yeah, I just thought a contrarian view.
No, that is not contrary. We are agreeing with him.
Yeah.
Nobody votes for a person who is supplying good without paying taxes. I mean, we are one with the government. These lawyers are not saying that, no, you will off. No, we don't say that.
Yeah.
So Arun, I think it's very important to understand one thing, right? The situation sort of here is nobody has sympathy for a tax evader, and everybody is saying that a tax evader must be treated separately and must be treated harshly. But the question is, if you take this in an analogy, right, of the entire population of India, maybe 2% of the population of India in their lifetime is accused of some criminal offense. So on that analogy, do we say all 100% Indians have a propensity to be criminals? That's not the analogy you can take, right? That's not the supposition we can make. And that's all we are saying. Let's not start with this supposition. Everybody accepts there will be evaders, but treat them differently from an honest taxpayer, because if you don't, the honest taxpayer will ultimately get pushed to being a criminal.
Okay, Rohit Tibrewala asked, he says, this, I think we saw a lot of discussion around this. Recently, the Supreme Court highlighted that the GST Council is not binding on either the center or states. Do you foresee a situation where SGST law is not in consonance with CGST law, including rates?
Sorry, may I just go here, because I think Lakshmi should have the last one. The situation here is, I think Mohit Minerals, which is the judgment in question, is
cooperative federalism
is being completely misread. Okay, the situation is, it recognizes the fact that yes, both can legislate, and that that right is coterminous, but it consciously uses three words. It uses the words that about harmony. It uses the word in terms of the fact of synergy. What is being said is that yes, constitutionally, both of them can legislate, but for the structure to survive, they must legislate in consonance with each other. If they legislate in opposite directions from each other, whether it was on rate, whether on place of supply, it will surely destroy the fabric of GST. I personally do not read Mohit Minerals as a license to states to individually form their own laws in a manner deviant from what is the central law. I think you still are obliged to legislate in harmony, administer in harmony, but that does not dilute the fact that you both have the right to legislate.
I mean,
Okay.
I agree with him. Mohit Mineral did not give the license to the states and the center to legislate on their own and then kill the entire fabric of the GST. My reading of this is the GST Council recommendations are not binding, but without the GST Council recommendation, you can't legislate. That's that both these things are coexist together, and therefore I do not foresee a problem of the center and the state legislating in different directions and then tearing the GST fabric. It doesn't happen. I mean, this judgment is not the reason for even thinking on this direction. Thank you.
I think the gentleman who Arun pointed out has responded saying that he's not saying that all are culprits, and he's just highlighting the sense of evasion, and he agrees with your views, and thanks you for your response. Okay, so we're going to sum up now, and Rohan, let me go with you first. So I think what we try to do is say, okay, what have we achieved so far? Where have we arrived? What have we achieved in terms of outcomes for both the government as well as for taxpayers? And is broadly in the right direction. And yet, on the other hand, I think there are some institutional gaps. There is a trust gap, all of which has to be filled if the system has to become more smooth and efficient. So in that backdrop, your sum up, Rohan, you first, as we look at the next 5 years, and if we were to meet 5 years later, what would we be hopefully talking about? And then after you, it's back to Mr. Kumaran.
Hopefully none of the issues we talked of today. And, if I had to sort of look at really 5 key issues, I think firstly, the levy of GST needs to be universal, which means petrol must come in, real estate must come in. And, the only exclusion is alcobev, which is constitutional. But ultimately, I believe a GST must cover every product. Equally, like I've said consistently, your credit system must ensure that every rupee of tax paid is credit. No exceptions, no burnout. Third situation that I think, will be of relevance is that these structural changes we talked of and mindset changes we talked of, greater trust and mechanisms to mediate issues which are interpretational while going hard against issues which are sort of evasion. I think we will also need a certain nimbleness to deal with new issues which will undoubtedly come in terms of AI, in terms of software as service, products, cryptos, online gambling. I think there will need to be a certain nimbleness there to move quickly. And
Rohan, if I may, what crypto?
Well, I mean, we are legislating for direct tax.
Okay. No, what I mean is, if there is a crypto industry still around. Anyway, go ahead.
Well, I mean, we need to, there will be a variation, right? And I think largely amongst the many other wish lists, I do sincerely hope that the fabric of the GST Council as a consensual mechanism continues for 5 years. Because if anything affects that, I think you've got a sunk GST.
Okay, thank you for that. Mr. Kumaran, last word.
I think we would say in the journey of GST, we covered about 30 to 40%. And the remaining is a thing we have to done. And if we cover real estate and petroleum products, we come to 60%. And the remaining thing is basically procedural relaxations, cutting down the extra returns, making the life simple, and differentiating between tax evaders and then the bona fide taxpayers. I think this is the way. As we say, the last mile is very difficult, but last mile has to be necessarily be covered. That's what I would say. Thank you.
Okay, thank you very much, both of you. Thank you, Arun, for inviting me to be part of this historic 5-year milestone, and maybe you'll remember me for the 10th year as well. It's back to you.
Goes without saying, Govind. I know Lakshmikumaran sir has to catch a flight, and Rohan, for him, 5:30 means now he's going to be watching a Wimbledon match with Rafael Nadal. So, yeah, I was a little worried about their mood, considering that India lost yesterday. Rohan bhai is an avid cricketer. So you're following Wimbledon, Lakshmikumaran sir?
Yeah, of course. Contrary to your thinking, I also followed and I enjoyed cricket. Why are you thinking?
Oh, cricket as well. Sir runs
also. Yes.
Govind, you won't believe it. Sir runs a marathon even now. So you have two people who are avid sports fan along with me as well. Rohan bhai, but thanks so much for the sporting spirit. Lakshmikumaran sir, you as well. A pleasure to have you all on this panel. And Govind, I can't thank you enough for moderating this. Thanks once again to all the readers. We couldn't take all questions. There were almost 40 of them, but I think Govind managed to somehow go through as many comments as possible. Thanks once again to all our patrons and readers, and keep following Tax Sutra for all the latest updates on income tax, GST, transfer pricing, corporate commercial laws, all the gamut of laws that there are. We will, try to cut through the clutter and demystify some of these complexities that Lakshmikumaran sir and Rohan bhai talked about. Thank you once again. Thank you.
Thank you.
Thank you.
Thank you. Bye.
Thanks, all.